When we designed the forum this year, we made several changes, and one of them was to open up the discussions to the media, to take these conversations to audiences outside of this room. And one of the biggest changes is to actually invite the media onto the stage. And so we have a distinguished journalist who is going to introduce our next guest. He is Peter Cook. He is the chief Washington correspondent for Bloomberg TV. He is the host of a popular show here in the United States, especially in Washington, called Capital Gains. He's had a distinguished career as a very successful journalist and reporter. He was a producer and reporter for NBC News and for MSNBC. He will be introducing Robert Zoellick, who we are especially privileged to have here today. Peter?
I'm going to take my seat here, and again, apologize for the cold. I'm fighting here in Washington, the springtime cold. I get it about once every 10 years, but coming at the end of it right now. It's a pleasure for me to be here and to be part of this forum, and a pleasure for me to introduce Bob Zoellick. There are few people in this country who have the range of public and private experience as Bob Zoellick. Of course, we all know he was president of the World Bank, Deputy Secretary of State himself, U.S. Trade Representative, worked at Goldman Sachs. It is safe to say there are very few people in this country who have a resume like Bob Zoellick, and it is a pleasure for me to once again have a chance to chat with you and then give everyone here in the audience a chance to talk as well and ask you a few questions. We'll go for about 20, 30 minutes, and then I hope to turn it over to you all for some good questions from the audience, so please have some of those prepared. And first of all, Bob, welcome.
Thank you, Peter.
Distinguished fellow as well, I should mention, at the Peterson Center for International Economics and also at Harvard's Belfer Center. So you're staying busy still.
Trying.
After the World Bank. You're off to China on Wednesday. You're a man of the world, and I want to start there and get your perspective. We're going to be talking a lot about the U.S.-New Zealand relationship, but give us a broader perspective for this audience, what you see going on right now with the state of the global economy and, more importantly, the challenges out there.
Okay. Well, first, this is a great crowd, and let me thank everybody for participating in this. When Mike Moore asked me to take part, I wanted to try to make sure that I could join you because we worked for years together all the way back when he was Prime Minister and then WTO, and he's been a fantastic representative of New Zealand in the United States. So given the importance of the relationship between the two countries, it's really nice to see such a large turnout. World economy. I guess what I would suggest people focus on is that in addition to the understandable attention about recovery from the Great Recession, there's another very big structural shift going on. And in understanding the economy today, it's important to see how those intersect. And that structural shift probably isn't as new to people in New Zealand, and in the United States, people's awareness is picking up pretty quickly. And that's, in a relatively short span of time in historical terms, the rise of developing countries. So just to give you a couple of snapshot senses of that, in the past 5 years, over 2/3 of global growth has come from developing countries. And as recently as the 90s, that would have been maybe a quarter or a fifth. In the case of the United States, over the past 10 years, the share of U.S. exports going to developing countries has increased from 25% of the total to 50% of the total. In terms of global reserves, the developing countries now have about 70% of global reserves. In the 90s, the developed countries had about 70%. Now, some of this, as this audience certainly knows, is the story of the rise of China, but it's much more than that. It's not only Southeast Asia, but Sub-Saharan Africa has been growing about 5 to 6% for well over a decade, and is likely to grow 5 to 6% this year. So what I find important, not only from the bank's perspective or trade or in general from the investment world, which I work with now, is that this is going to have ripple effects through everything from trade policy, investment policy, supply and logistics chains, tourism, remittances, environment, and over time it'll affect security issues as well. So it doesn't mean that those emerging markets are always a positive play. If, for those of you in the financial markets, you'll see actually they haven't performed as well over the course of this past year. And that's partly because some of them are now having to adjust from export-led growth to greater domestic demand, and how they make that adjustment is going to be a challenge. But then if you combine that with the fact that for the past 65 years, we've had an international system that was basically structured by the United States, and then the trilateral partners were Europe and Japan, and you consider that the Europeans now are basically focusing all their attention on keeping the Eurozone alive. Japan is, taking now some extraordinary steps to revive itself after decades of difficulty. And really, of those three, only the United States has a chance to reshape this global system. And so some of the topics that you have on the agenda today very much sort of fit that. But how those pieces fit together, I think, is important in trying to understand the future of the world economic, security, environmental system, as well as, obviously, some of the issues related to the ongoing recovery.
Before I dig into the Asia Pacific, what's your sense of Europe right now? Is the European debt crisis behind us?
No, one of the observations of Rogoff's and Reinhardt's book that wasn't questioned was that if you look at the history of these financial crises, they take on average about 10 years to recover. And in that broad brush look, we're about halfway through. So I think with the intervention of the European Central Bank, you've got the reduction of tail risks, and you've sort of been able to calm some of the waters of the financing. But the fundamental challenges are threefold. One, there are issues for some countries of getting to competitiveness. Secondly, you have a debt issue. And third, you have a banking sector issue. And they're all interconnected. Obviously, if you don't deal with the debt and the value goes down, that's going to affect the bank's capital. So my own guess is the most likely course is one of muddling through, but as, again, people are probably well aware, you're really doing this in a no-growth environment. And that then presents the issues of the politics of reform. So for how many years can people struggle through with those challenges? So I think in the larger span of things, what it means is that Europeans are going to be preoccupied not only now, but for many years to come. And that's a big shift in the world system. So for a country such as New Zealand, which has ties with the European world, ties with the transatlantic world, but also is clearly a Pacific player, these are part of the bigger shifts that one has to deal with.
All right, let's talk Asia Pacific. Let's talk China specifically. Your sense about the economic outlook for China, the questions about growth going forward, the challenges they face. Every day at Bloomberg, we're looking at stories, questions about whether or not this pace can be maintained, if it slows, what they do to sustain it. Your sense of China right now and the challenges there.
Well, in a way, the China story fits from your first question, because given the changes in the international economy, China is also going to have to change its structure of growth. So it's an amazing story to grow on average about 10% a year for 30 years, but that was driven primarily by export-led growth, often government investment in fixed assets. And that model will clearly not succeed going forward. So there was a report that the World Bank did with the Chinese before I left called China 2030, and it does a pretty good job of outlining the types of structural changes that China will need to make. And in essence, it will have to move to greater consumption, domestic demand. Now, the good news is the Chinese authorities recognize this. Some 20 years ago, when I was at the State Department the first time, we had launched with the Japanese something called the Structural Impediments Initiative, which was an effort to get Japan to restructure some of the service sector and issues to increase productivity. And unfortunately, Japan treated it more as a narrow negotiating exercise. So Japan never made those changes. And you can see the effects of that today, where you have Prime Minister Abe with his three-arrow policy trying to sort of re-energize the Japanese economy. So the Chinese recognize the need to do this, but this is going to be a huge task. So what I, again, often point out to people is that there's a tendency, understandably, for people to focus on the quarter-by-quarter changes in China. I think you'll miss something unless you focus on whether they're making these structural changes as well. And what I would, this is obviously a big topic of debate right now with the change of the new leadership and the new standing committee. As, again, people here probably know, in March you had most of the ministers appointed. And what one should look to is what's called the third plenum of the Party Congress, which will be in this September, October, to start to outline the policies that China will take. China will not follow a Big Bang approach, but I think the issue will be in what areas will they put as priorities. As you mentioned, I'm going to be in China later this week. I was in China a few months ago, at which time one could see that Li Keqiang, the new premier, was emphasizing urbanization as a way of trying to draw together a lot of these issues in a less controversial way, because it deals with land policy, it deals with the labor markets, it deals with enterprises, it deals with environmental topics, it deals with the value-added aspects. And again, you know, one of the striking aspects compared to most of the experiences of people in this room is, you know, for years the story about China was how does it create millions and millions of jobs a year. You know, over the next 5 years, China will have more people leaving the labor force than coming in. And so this is going to mean that the real challenge for China is moving up the value-added chain. Now, one last point on this, which we can come back to. These structural reforms in China actually provide some opportunities for the United States, New Zealand, and others if they're seized properly with the Chinese. For example, one of the areas that China will have to open up if it wants to increase productivity and more opportunities is the service sector. It's what Japan never did really open up. And if it opens up service sector competition to more private sector firms, more foreign firms, you have some real win-win possibilities in that area. Agriculture, which is a strength of New Zealand and the United States. China devotes about 90% of its water to agriculture. That's not going to be sustainable. And so as, again, you start to increase what people eat and their meat products as opposed to grains and others, you're going to have a series of changes that are going to ripple through all markets. So again, going back to my point about developing countries in general, what's interesting is to track its effect on agriculture, urbanization, environmental topics, and others. So I think the bottom line is that the good news is China recognizes the need for these changes, but this is going to be a very difficult process. There's one last issue, particularly for this audience, I'll highlight, and that is, if I look at the U.S. relationship with China on the economic side, it's got a lot of frictions and difficulties, but there's a network of relations which, unless we really screw it up, you should be able to manage this. The security side is a totally different process, and part of the problem there is we don't have sort of Paul Mill dialogues like you have on the economic side. And that's in part a function of the fact that in the Chinese system, the People's Liberation Army reports up to the Central Military Commission, which only has 2 civilians on it. It's a party body. And what that means is the Chinese don't have an equivalent to a National Security Council system where you integrate the foreign policy, the security policy, defense policy, economic policies. And because of that, it's been harder for the two countries to engage in dialogues about some of the changing issues, for example, in maritime security and where there's common interest. That is a potential danger point. And again, it's probably the case for all the Americans, are keenly aware of this, but for the New Zealanders, the area that I'm most worried about right now is cybersecurity. This is a field where it's not only traditional espionage and potential questions of cyber war, but the commercial cyber piracy and sabotage issues are ones that I don't think any of the countries have a framework for dealing with, and you can tell in the politics of the U.S. that this could be a raging prairie fire if people don't manage it.
You're more worried about that today than, say, you were even a year or so ago?
Yes.
All right, let's turn to Japan a little bit. Cover of The Economist this week, Shinzo Abe with a Superman cape on Is he Superman or something else? What's going on there?
Well, time will tell. I think, Japan found itself in a very difficult position. This is a country that had demographic problems, because of the aging. It's a country that was struggling with deflation. It had natural disasters. And so, on the one hand, I think it's understandable that Prime Minister Abe would come in and try to have some shock effect. But no one should be under the illusion that this isn't a big gamble, because this is a country that already has a very large debt. And depending on what happens with interest rates over time, this could be a very difficult challenge to manage. I think what I would watch, and it again relates somewhat to the TPP discussions here, is in addition to the huge monetary action, which has had some positive effect, obviously, in stock market, although mainly with foreign investors, some consumer confidence, first quarter growth is high, is that how do you make sure that isn't just a sugar high? How do you make sure that there's a follow-through? And that goes to what the Japanese refer to as the third arrow, or what I touched on in the context of the Structural Impediments Initiative of the early 90s, which is the need for structural reforms. And if Japan doesn't undertake those structural reforms, either through its own policies or through the TPP or both, I worry that this will primarily be a currency devaluation strategy, and that has dangers for others. As you can see the effect in Korea, I saw that the New Zealand Reserve Bank, run by my former colleague Graham Wheeler, has also started to intervene. There's a danger now that we could have, not necessarily that it's been intended, but the ripple effects of competitive currency devaluation. So for Japan, it's very important that the system follow through on some of the structural and microeconomic reforms. And again, let me just give you one example of a shift that won't be easy but could make a big difference. Anders Borg, who's a very effective finance minister of Sweden, spoke at an event I was at a few weeks ago. And his ministry had done some research on gender and development. And their sort of rough calculations are that if women had the same role in the Japanese workforce as they do in Sweden, it would be an increase of GDP about 9%, which is a big number. So, when you look at the Japanese system, I think the big challenge will be whether it can use this combination of actions to get itself back on track. A last word on the trade agenda. In 2001, when I became U.S. trade representative with some of the people in this room, I wouldn't have believed that Japan could have taken on the politics of a free trade agreement. Having seen what happened in Korea, which was led by a man named Hyung Kim, which shows the importance of kind of individual leadership. He really pushed that FTA through the Korean system, is that it's possible for Japan to do this, but it's going to take some real political and will and push.
Were you surprised when, in February, when he sent this signal that this was Shinzo Abe said we want to be at this table?
I wasn't surprised, mainly because I could see the strategy evolving and that they would want to focus on the structural reform, and the TPP gives them a vehicle and kind of a logic to do what they need to do in any event. I think the challenge will be whether the words are matched by action, but frankly, that's true for other parties in the TPP.
Are we in a currency war right now?
No, but I think that the danger is we're clearly in a world of extraordinary monetary policies, and some of this is understandable as a way of trying to deal with the tail risks, trying to stimulate growth. I think what I hear more and more people sort of raising questions about is whether the costs start to outweigh the benefits. And the danger here is that we can start to plant the seeds of other problems. So what people will start to worry about are things like asset price bubbles. So, if you look at the bond market, you've had tons of people put money into bonds because they think they're safe. Well, someday if interest rates go up, they're not going to be so safe. You look at the spreads for junk bonds. One of the things that clued me into this years ago was that when I was with the World Bank, I would sometimes try to stop at some of the regional Federal Reserve banks in the U.S. because they are very good institutions. They often have very good economic staff that know the local economy. And I was at the Kansas City Fed, this was I think 3 or 4 years ago, and I was asking them what was on their mind, and they were talking about farmland prices. And I had dealt with the farm credit system crisis in the late 80s, and the real prices of farmland in the United States were already above the late 70s highs. Now, they weren't as leveraged, and since that time, prices have gone up, they've stabilized a little bit, but I know market players that have already gone in and out of that market. Now, it's just symptomatic of the fact that all that money has to go somewhere. And so going to the currency devaluation issues, if you're in the East Asian environment or Pacific, including New Zealand, there's the danger that some of that money is going to go into other markets and create currency pressures. So Fred Bergston, who was the head of the institute where I've got my office now, delivered a speech last week where he started to focus on some of the concerns about this issue. And I think you'll see it show up more in the trade agenda. So for example, when the Congress turns to the Trade Promotion Authority issues, I think you'll see the pressure for greater discussion of currency in this context.
Let's talk about the Trans-Pacific Partnership and free trade more generally. You touched on Japan's participation. What's your sense, the prospects for the Trans-Pacific Partnership and the challenges here in the U.S. for this kind of effort?
Well, conceptually, given what I've described, it has a real appeal for the United States to show its links to the Asia Pacific, and obviously it could be a big plus for New Zealand. And in that sense, in a strategic sense, it somewhat builds on the idea of APEC, which was launched just as the Cold War was ending in 1989, as kind of trying to create political economy institutions that would support the U.S. presence across the Pacific, including the security alliances. But I think there are a number of questions that are going to come to the fore. I mean, first off, the U.S. has free trade agreements with, I think, about 6 of the countries in the negotiation already. So that means you'd be adding New Zealand, Malaysia, Brunei, Vietnam, and Japan. Japan is a whole different category. As I go through those 4, I can think of some difficult economic and political issues that are going to have to be handled in the process. Now, then it also leads to the question is, what are you really aiming for through this agreement? When I listen to the U.S. participants, they say, well, we want something better than the existing free trade agreements. When I talk to some of the Asian participants, they say, well, we'd sort of like to have something between WTO standards and kind of U.S. FTAs, which are very comprehensive, so that it could be expanded to other Asian participants. And I think that really raises the core question, which is, as I understand it, you've got people here in the audience probably know, there's been a lot of work done on this. And I think they've drafted 27 or 29 chapters. But they haven't begun to face any of the tough issues. And this really comes back to the United States, is that at least when I've asked some of the U.S. officials, okay, if you're going to want more than you have in the current FTAs, what are you willing to give up? They sometimes talk about, we think the Canadians will open up their dairy market, so that suggests that the U.S. is trading Canada's stuff. In my experience, that's not a very effective way of putting a deal together. So I think there's the question for the TPP, as well as the Transatlantic Initiative, is on the one hand, I'm encouraged that the administration is talking about the importance of trade. On the other hand, if you look at their performance in the first term, trade was not a priority. And indeed, the 3 FTAs that got passed because of those nasty Republicans in Congress who turned out to be more internationalists than the administration. But the challenge here is whether this could be a bipartisan topic going forward. It's coincidental, I was up talking to Ways and Means Republicans informally last week. There's a very strong interest in this, as there is with Senator Baucus, Chairman Baucus on the Senate side. But at least so far, what I've been able to ascertain is Camp, the chairman of Ways and Means, and Baucus, the chairman of Finance, want to move ahead with TPA, which is an encouraging sign. But the administration has been a little bit kind of uncertain of how it wants to play it. I think, obviously there was a lapse because it took time to appoint a new USTR. I think Mike Froman is a very qualified individual. He obviously has been working with these issues. He's close to the president. That's a good sign. But, you got a lot of trade people in this room, and they know the real test is whether you can really push for decisions and close deals. There's a lot of people that can talk about this stuff. The question is whether you got the will and guts to close it. So those are really still very open issues. And the reason I have tried to actually encourage Republicans, the business community, and others to support this is the worst thing would be if the U.S. just talks about this but doesn't really deliver. And so insofar as other parties can push the administration to follow through on the rhetoric, that's critically important.
Let me stop right there.
There's one other issue I just want to touch on, China. Because there is a view in China that this is being kind of as part of a containment idea. And that's obviously foolhardy. China is so integrated in the economy. But it does suggest that it would be important for the United States to combine the TPP and the Transatlantic Initiative with overtures to China, not necessarily in the TPP framework, but in some of the bilateral topics I talked about with structural reform, or critically important, you got a potential WTO agenda dealing with services, sort of intellectual or information technology agreement as a second stage, trade facilitation. And so for competitive liberalization to work, which is the only way the U.S. has moved forward the trade agenda, you have to be in different forum. And so the one other aspect of this is that I hope the United States also keeps its hands in the WTO and in a China arrangement.
Well, that's what I was going to ask you next. Just the WTO in general. Is it dead?
Well, no, of course it's not dead. The question is whether it plays an important role going forward. And look, at the end of the day, the WTO, as Mike knows, was a member-driven organization. So it's really has to be driven by its principal members. That's partly the U.S., but it partly goes to the point that I started with. We're now in a world where you've got large developing countries, and the roles of China and Brazil and India and Colombia and Mexico is different than African countries. Now, at the time that we launched the Doha round, there was an effort by a number of the middle-income countries to act like they were going to be Sierra Leone. Well, they're not Sierra Leone. And so what will be the roles and responsibilities in this context? So you're going to have a new director general, and I think I've already touched on the point that I wrote something on this a month or two ago in the Financial Times. I think it's important to show progress in some of these areas that you might be able to have sort of mini deals in trade facilitation, some of the areas for the least developed countries, an ITA2, a service sector. But on the service sector and the ITA2, there's going to be a very critical issue that WTO is going to have to face. And that is, so far the system is based on an MFN logic, and that's kind of holy writ, most favored nation. And I certainly wouldn't suggest changing that for what we have today. But I think we're going to be in a world where if you're going to advance the countries that are under their own strains to further liberalize, they're going to need to be able to be in a position to say that the benefits of that will only go to other countries that liberalize. So it's a reciprocal liberalization. Now, for some technical reasons, you can do that in the service sector accord. For some of these other accords, that'll be a question. But again, to come back to kind of the U.S.-China relationship, if China would benefit from opening up its service sector, what about the possibility of China, the U.S., and others working to advance the service sector accord in the WTO so you take advantage of your development strategy in the process of improving the global rules? This would kind of fit the responsible stakeholder notion that I talked about in 2005.
Let me put a proposition past you, get your take on it. I think I know the answer already. The second-term legacy for this president is going to be trade.
Well, that would be nice.
You don't buy it. You're skeptical.
Well, look, I mean, I'm very pleased that the administration has highlighted trade. I think, this is not necessarily a Republican-Democrat thing. President Clinton put an awful lot of effort into trade. I think he believed it. I had some contact with Senator and then President Obama. I don't think he felt it as naturally. It's difficult for his constituencies, so now they've highlighted it. But what I just want to underscore is it's easy to talk about this subject. And I don't really know whether they yet have a sense of what goes into building the constituencies and making tough decisions. And at the end of the day, There's a lot of people that sound tough on trade, but when it comes time to actually closing deals, they shrink. And so that will be the true test here. And it's also whether you go into a creative problem-solving mode. So let me give you an example that, because it was on my mind from the transatlantic. In the transatlantic context, there's going to be very sensitive issues for agriculture, which is interest to both New Zealand and the U.S. And so the American farm community says, well, look, we negotiated to open up the grain market, we're blocked by biotech rules. We negotiate to open beef, we're blocked by hormones. We negotiate to open up poultry, we're blocked by chlorine. Well, we won a WTO case on beef with the European Union. And even during my time, we got close to either getting the Cattlemen or the American Meat Institute, I forget which, to say, look, is it make economic sense to have a product line of non-hormone beef if Europe increases its quotas enough for that product so that it makes economic sense? We couldn't swing that in the context of just a WTO case. But in FTA, you might be able to do that. Now, what this is just an example of is that you're going to have people come in on these issues that are politically sensitive and difficult and figure out how to put together a package that deals with expansion of markets but deals with sensitivity. So Mike Moore and I have exchanged notes about the dairy industry, which is always the one that's going to scare some of the U.S. dairy industry with the role of New Zealand. The U.S. dairy industry is at least two different industries. You've got a very competitive industry on the West Coast, very large players. You've got other parts of the country that it isn't. So the point is that this just is going to require a lot of lifting. And in that sense, I'm glad that Mike Froman has moved to make trade his full-time job, because he and the USTR team and others are going to have a lot of problems to solve. And it'll be important for constituency groups and business and other groups to kind of help them come up with creative solutions.
I'm going to ask you one more question, then I'm going to open it up to the audience. I think there are microphones out there, so when you have a question, please identify yourself so President Zoellick can answer your questions. U.S., New Zealand, the framework for this partnership, for this discussion, what's next in that relationship? What's your take?
Well, my guess is that's the type of topic that one will hope will come from this context. I think, all these subjects kind of create a framework where it's important to see relationships in the bilateral context, the regional context, in this case Asia Pacific, and globally. So sometimes people assume there's an either or. I don't think that's a sensible way to think about this. So whether it's trade, whether it's dealing with natural disasters, so about 90% of the natural disasters occur on the East Asian Ring of Fire. That obviously is front and center for our New Zealand community. Whether it's the question of broader security arrangements, whether it's rise of China or other issues, the question is how can New Zealand and the United States sort of structure partnerships, recognizing they've got different political limits and economic constraints. And underneath it all is a recognition that this goes way beyond the governmental world. So, the type of world that I'm describing here is transnational, private sector. So take the case of dairy. How Fonterra invests in the United States becomes as important as anything that the government players can do, and the type of relationships they develop, or whether it's the case of environmental issues. So I think where a forum like this is, I think, particularly useful is that it expands beyond the formal sort of government structures and tries to think across the bilateral, the Asia Pacific, and the global to see where the connectivities lie.
With that, are there questions from anyone in the audience out there? There's got to be some questions. This gentleman right here in the front row. Do we have a microphone for?
And maybe
Great.
if you could just introduce yourself.
That'd be great. Microphone's coming to you. This gentleman in the front.
All right. Good morning or good afternoon. My name is Deck. I'm one of the American Future Partners, and I'm interested to get your insights on kind of what role demographics will play in the future economic phenomenon we're going to see, particularly in Japan and the U.S. I think, as we saw in our last election here, almost unequivocally, there was bipartisan agreement that demographics were incredibly important. Like it's something you can't ignore. So I just wanted to get maybe your insights on what policies Japan or the U.S. may look at to kind of mitigate what demographic issues we're going to face in the coming years.
That's an excellent question. Some people have said demographics is destiny, and it's interesting when you talk to demographers because a lot of this is sort of baked in the cake. So I touched on Japan. There's no doubt that part of what's driving the slower growth, but also perhaps the less dynamism in Japan is the changing demographics. You have to then connect this to immigration policies. So, I always remember in my first meeting with Lee Kuan Yew, I was with Secretary Baker in 1989, and he was talking about the U.S. as a society. And he said, in Britain, if you go to the right schools, you get the right degrees, you belong to the right clubs, you can become an honorary Briton. He said, in Japan, your family can be Korean and live there for, decades or centuries and never really be accepted. He said, the United States is a place where if you live and you kind of follow the rules, you raise your hand after a certain number of years, you're in. And that does say something about the openness of societies. If you look at the demographics in Russia, this is, it's striking how you have a drop-off in sort of male lifespan. A lot of this is alcoholism and health. By the way, there's a little sub-story here about its relations with China and some of the Siberian areas. If you look at China, as I talked about, the one-child policy is going to have huge effects on a country that's going to grow old before it grows rich. In that sense, the United States actually has kind of an advantage because the demographics are stronger in the United States. I don't know whether the immigration bill will pass. If it does, this actually becomes a great structural reform. We talked about structural reforms in addition to the macroeconomic, and I think it becomes a great set of opportunity. In the case of policy with New Zealand, one of the interesting aspects I worked on the bank was, and again, this is something that probably New Zealanders are focused on much more than people in the U.S. New Zealand and Australia have a real interest in some of the Pacific Islands where there's been dangers of instability. And the question is, what are the economic livelihoods? And when I was at the bank, we tried to actually do some alternative energy things to cut their costs. We tried to take advantage of modern telecommunications to interconnect them, transport. And there was a worker policy that actually had been connected with New Zealand. And given some of the easier connectivity with the Pacific Islands, it actually made sense that these people might sort of work in New Zealand part of the time, return home part of the time. So I think, smarter countries are going to be more aware about how immigration policies are a key in terms of their overall sort of growth and development strategy. Now, implicit in your question was also some of the mix, as in the case of the United States. And I think you're exactly right. I mean, I think in that sense, it was a very healthy aspect of the 2012 election where my party, the Republicans, realized, look, if you ignore very important sort of voting blocks and groups or alienate them, you're going to lose. And, so there was a big drop-off in, for example, support of Hispanic Americans. Now, sometimes it takes people a while to come to terms with that, but it is interesting to see how this immigration legislation, which still has a long, tough road ahead of it, how quickly that changed because of that context. So I think, as you look around the world, including in the Islamic world, what's interesting is there's a lot of focus on the youth bulge. But you look at some of the Islamic countries, including Iran, by the way, and there's a huge drop-off. And part of this is income levels. Part of it actually, I touched on sort of gender and economics as a women's empowerment issue. That starts to affect how many children people want to have. And the understanding the kind of effects on this, on everything from workforce to pensions to bulges to overall sort of growth, I think is a key structural issue.
Sure, there are other questions right here, sir?
Thanks. My name is Jack Georgieff, and I'm one of the future partners here, but been based in DC the last couple of months, so it's great town, and the weather's getting nicer, which is always great. Thanks very much for your presentation. It was really interesting.
It's getting warm now, actually. Trust me, in a couple of months, you won't think it's so nice.
This is a swamp.
I'm told July is not very nice. I wanted to ask specifically about what the US-New Zealand relationship can do in sort of two aspects. One being sort of North Korea is currently a situation where basically the diplomatic playbook has sort of gone out the window, so to speak, and that we really don't know what Kim Jong-un and his regime are up to. They've just fired missiles into the Sea of Japan this morning. Regime collapse is getting a lot of sort of talk around town. I was just wondering what this relationship can do in the context of that, and then more broadly, what this relationship can do with China in terms of multilateral security engagement. I think it's fair to say that on some issues, China just doesn't want to play ball in multilateral security environments. So I'm just curious to get your comment on both those takes.
Yeah, very important. And just to give you a little context, in Shanghai, I'm giving a speech at the Shanghai Forum where I'm taking the concept that Xi Jinping has launched about a new type of great power relationship, which the U.S. administration has somewhat embraced, but no one has filled out. And I'm going to try to outline what it might look like in both economic and security terms. And as I suggested in my answer to Peter, I think that it's critically important in both areas, but the pathway is easier to see in the economics. It's still got bumps in the road, but in the security, I do believe there should be mutuality of interest, but particularly in the maritime space and the cyberspace and others, this got some real danger points. For North Korea in particular, I think, just to state the obvious, it's extremely dangerous. People don't know about this leader. They don't know about what his pattern is. It's not that it's just rhetoric. I mean, in the past couple of years, North Koreans have used force and killed South Koreans twice. And, you know, they've at least said they wanted to end the 53 armistice. They've sort of directly threatened the United States and Korea and hinted at Japan. And they're developing sort of nuclear and missile capabilities to do so. So the starting point for that is that I think countries that are worried about that development need to try to band together. So the starting point is Korea, the United States, and Japan, but New Zealand, Australia, and others that are concerned about stability, I think, can encourage this. So as not to be belligerent, but to suggest to the North Koreans that this is a dead-end sort of pathway. And that will require fine modulation, and particularly given some of the sensitivities with Korea and Japan, any help that others can give the United States, I think, would be useful, because at the same time you've got, you know, Abe doing some things on the economic side. There's some steps in terms of security anxieties that just feed into sort of the historical frustrations on the part of Koreans. The key issue will be China on this one, and my experience is that while the Chinese aren't necessarily comfortable with what's going on in Pyongyang, their historical view is they want a buffer state, and they're worried about the prospects of change. So the question is whether the increased belligerency on the part of the North Koreans will get them to realize that the North Korean actions will prompt other actions by Japan, United States, Korea, and others that will not suit sort of China's security interests, because they'll have to be responses. At the strategic level, and I won't go into this in great depth, when I was leading a strategic dialogue with Dai Ming-Guo, we would talk about kind of what would be the prospects and different sort of U.S. and other responses. I think that needs to go to a much deeper and further level. I mean, I'm not trying to forecast this, but if you did have some sort of collapse in North Korea, you could imagine having South Korean, U.S., and Chinese troops all together. People need to be thinking about some of these scenarios in ways. And that leads to the broader issue of, and where I think New Zealand also can play an important role. At the end of the day, China's own interests, whether it be energy, whether it be sea lanes, or a whole series of other access points, should be to have cooperative relationships in the region. But what you can see happening is some of the pushiness, whether in ASEAN, whether with Japan or others, creates a counter-reaction. And so the more that the Chinese can get the message that there are win-win possibilities here, but if they act in ways that lead others to hedge, they can't be surprised at the result. So in that sense, the larger Pacific security community needs to convey this, because there will be groups in China, understandably, that sort of say, look, we're richer, we're wealthier, we want to have more of a say, and those have to be pushed back. So it goes back to a little bit to what I was sort of hinting at with how the Chinese make their own security policy and whether it's an integrated approach.
Other questions here, sir?
Thanks. Hi, I'm Peter Bryant, New Zealander living here in the US for the last 20 years. Just interested in your comments around the recent explosion in US energy production around oil and gas and its impact on trade dialogue, geopolitical dynamics, and I guess the US mindset as it approaches that.
Yeah, huge topic, and in different ways. One is, I touched on Japan and Europe. At the most basic level, what it represents to me is how the United States, as an advanced economy, still has innovative capacities that other advanced economies don't. I remember 5 years ago people describing to me what became known as fracking, and if this were a government-led economy, it never would have happened. But instead, people could take an idea, they could access capital, they could apply some risk, and they could start to transform the nature of the economy. Interestingly enough, it's, as you probably know, it's not only gas. Daniel Yergin, probably this audience knows for his work in energy, pointed out to me that I think U.S. oil production since 2008 has risen about 60%. The marginal increase is the same as Nigeria's output. And so if you look at some of these numbers about, and this also, by the way, fits, since I talked about integration strategy, how the United States integrates with Canada, an energy market, and if Peña Nieto in Mexico starts to do some of the things, you could get to the position where the United States, which in 2007-8 was importing 70% of its oil, becomes basically net zero energy or even exporter in some aspects. Now this has ripple effects. It has ripple effects on electricity costs. It has ripple effects on manufacturing. It has ripple effects in certain sectors like chemical and paint and other aspects. So it has sort of potential transformative dimensions. And then, as you also talked about, depending on whether the United States is willing to export the LNG, which I hope that it is, it also has other aspects on other economies. And it's just interesting to play this through. I mean, so I'm not saying this is a one-to-one, but I was in the State Department at the time of the end of the Cold War and German unification and Soviet Union's collapse. When you go back and you look at some of the things that affected Gorbachev, having oil at $15 a barrel certainly was a big recognition that the Soviet economy couldn't operate. You look at the Russian economy today, it's still an energy and oil play. I mean, so if you started to change some of these price relationships, you would get some political effects. Now, it has other dimensions. So some people have said, well, does this mean that the United States would no longer have the same energy interests in the Gulf? I don't believe that's so, because oil and energy is a global commodity, and also I think we have other security interests with Israel and others in the region, but in raising it, I think you're doing an important thing, which is these are one of these topics that I think is going to run through and transform a whole series of different industries, concepts. When I was in Brussels speaking to an agriculture group a couple months ago, they were very worried about the competitiveness on American agriculture because of the lower cost of fertilizer and others. So, I mean, the main point would be, I hope that U.S. policy doesn't do anything stupid to sort of thwart this development, but also the industry needs to do it in a way that avoids, the environmental sort of blow-ups that end up setting things back. But so it's that, along with software development, along with demographics, along with some of the things that I see in biotech, are actually reasons why, for the medium and long term, I feel quite positive about the prospects of the U.S. economy. And I touched on this a little bit in terms of asset prices. You can see where, in some ways, people are now investing in the U.S. economy, given some of these prospects in the overall global context. My worry for the United States is that we have to get on top of the entitlements issue. So the budget situation, as people have known through the combination of the tax increase and the sequester, is at a manageable level. But we're spending about $7,400 a year for every man, woman, and child in America for an entitlements program, and it's just not going to be sustainable. So I dealt a lot with Europe. You can see when social welfare systems get to the point where they can't be afforded, if you wait too long, they break. So that is the major issue structurally that the United States needs to deal with. Interestingly enough, you see at the state level, this is where it's important for New Zealanders to come to the United States. America is a big country. You see what is happening in some of the states where people are pursuing some structural reforms, whether education or pension or others. And just one last point on the pension, coming back to your monetary issue. There's a lot of assumptions about pension returns built into pension plans that today's monetary policies would certainly put into question because the returns are going to be much lower. So that's going to be another sort of fallout issue of the monetary policies.
Let me wrap this up with a final question to you, and again, touches on what you just talked about. Domestic issue here that everyone in the United States has been talking about, but perhaps not doing as much about in the last little bit, and that is the budget challenge here, the long-term budget picture. What would it mean? What are your own expectations right now, given where we stand, given the latest CBO numbers for perhaps not as much pressure in the short term, for the U.S. to actually, both sides, Republicans and Democrats, to put their issues aside and cut a long-term budget deal? Do you think the prospects of that are all but gone at this point? And if it was to happen, what would that mean for New Zealand and other countries?
Well, the prospects are low and fading, but let's keep in mind, people use dysfunctional a lot with the U.S. political system. I don't think that's the appropriate word. We're not a parliamentary system, as New Zealanders have learned with different party structures. You can create your own dysfunctionality too, but anyway, it's important to recognize that separation of powers is designed for a reason, in part so that to keep a private sector be able to do things like energy. But where I think, in addition to the entitlements program and related to it, is a broad-based tax reform. I was part of the tax reform process, but in a very minor way in '86, the last time this was done with Secretary Baker, and I know what has to go into it. And again, when I was up talking with Dave Camp, I had a sense that both he and Max Baucus are very interested in doing a broad-based tax reform. But at the end of the day, in the U.S. system, the president and the executive branch have to play a key role. You cannot drive these things solely from Congress. I know that some congressmen hope they can, but whether it's trade, whether it's entitlement, whether it's tax reform, you need the president to show that commitment. And this gets into a long story, and I don't mean to get into a sort of a partisan aspect. I don't know whether this president is willing to really make some of the compromises that one needs to do. I understand from his position, he won an election, he kind of would like to sort of see people sort of just follow his agenda. The reality, it doesn't work that way. And so, if from my point of view, but I have a different, perhaps ideological bias on this, what's sad is with some minor adjustments in things like retirement ages, cost of living indexes, co-payments, you could make a big difference. And you could bring along a large number of Republicans in that process. But right now, they just don't see the president there. So I think where I would point to on the structural side is to say, if immigration can get done, and this is one, I guess, that is the counter to what I just said, because in this case, the president probably is best to stay a little away from it. That could be a big structural reform. But so I'm not saying this with a good feeling about the structural side. There are people who want to try to deal with these tax and spending issues, but if you ask me as a political analyst, I wouldn't put a lot of money on it.
On that uplifting note, Bob Zoellick, thank you for joining us. I want you all to note the all-black cufflinks that Bob Zoellick is wearing here.
Sorry.
And thanks for your thoughts and insights, and good luck to everyone here for the rest of the partnership. Thank you very much.
Thank you.